the good news is that something did break to at least get the Fed to think about what it's doing. The bad news is, 2 days after Silicon Valley Bank went under, along with Signature Bank, the Fed raised interest rates 25 basis points. The Fed has never before this time raised interest rates in the middle of a crisis. And here again, they're talking about another 25 basis points in early May. With today, I think it was Christopher Waller coming out. He's at the St. Louis Fed and talking about inflation just being way, way, way too high.
Cathie Wood, the founder and CEO of ARK Invest, has raised concerns about the Federal Reserve's aggressive interest rate hikes, warning that they could potentially trigger a collapse of the financial system and cause the U.S. economy to slip into deflationary territory. According to Cathie Wood, amidst growing economic disruption, Bitcoin and Ether are emerging as safe haven assets for investors. She suggests that the two leading cryptocurrencies could potentially serve as a flight to safety in the face of global financial turbulence. Cathie Wood is recognized as one of the foremost crypto enthusiasts on Wall Street. In a recent report from ARK, she forecasted that Bitcoin's value would reach $1.5 million by 2030. She posted a tweet, "Why have Bitcoin and other crypto assets appreciated during this banking crisis? In our view, and in contrast to those in the traditional financial world, many crypto assets face no central points of failure. They are decentralized, transparent, and auditable." Make sure to subscribe to our channel and hit the bell icon for further updates.
I think the most remarkable of all the indicators that we monitor was Bitcoin during the crisis. Now, it typically acts like a risk-off. It tends to do poorly during risk-off periods. This time, it did the opposite. From March 10th, when it bottomed at 19,500, it has soared 55% to $30,270. Ether has gone up 51% from 1,370 to 2,076. So these previously volatile, risk-on metrics are acting like flight to safety. Well, we think this is a theme that you should be watching out for. We think a lot of innovations out there are going to be the flight to safety. Why? Because they're going to disrupt the traditional world order. What are Bitcoin and Ether doing? They are, by the very fact that they're being considered flight to safety, like gold, that's really interesting and suggests much broader-based adoption and acceptance than I think most people understand. And given the government's railing against crypto and really putting pressure in all kinds of regulatory ways on it.
According to Cathie Wood, the current market is witnessing unprecedented levels of interest rate hikes, with the benchmark interest rate soaring from 0.25% to 5%, a 20-fold increase in just a year. Even during the tough monetary policy tightening of the late 1970s, rates only increased fourfold over a period of 3.5 years, reaching a peak of 20% from 4.75%. Wood emphasizes that this dramatic surge in interest rates is a significant shock to the economic system.
It has highlighted two major mistakes that banks made. Both of them actually were very understandable, but they were mistakes nonetheless. And they made those mistakes in the middle of COVID, as the crisis was unfolding. They took a look at the Fed's forecast through the end of this year and saw that the Fed was forecasting that interest rates would go nowhere. They'd stay very, very low, move hardly at all. And so it made sense back then to take the gusher of money coming out of fiscal stimulus and ending in bank accounts and put that in very safe, long-term, government-backed securities, yielding 1.5 or 1.5% or so. Remember back then, the Fed funds rate was 0 to 0.25. So it made sense back then. So the first assumption they made was that interest rates would not go up very much, if at all, which is what the Fed was telegraphing. And of course, in 2022, and over the course of just 1 year, interest rates went up 20-fold. Never happened before. 20-fold, up to 5%. And that was a shock to the banking system because with such low yielding securities on the asset side of the balance sheet, it was very difficult for them to pay up for deposits on the liability side of the balance sheet. And so what happened? What happened was deposits flowed out and into money market funds, so out of the banking system. Now, Silicon Valley Bank happened for a little bit of a different reason, that failure. It was a venture capital funding drought. And basically, these startup companies that were banking at Silicon Valley Bank needed to fund their operations because they couldn't get any liquidity events going from the venture capital market itself. And so they started drawing down their deposits to run their businesses. But that got everybody then focused on what deposits were doing in the rest of the banking system. And lo and behold, the entire banking system was seeing deposit outflows for the same reason that deposits weren't paying much.
According to a recent discussion with Barron's, Cathie Wood believes that the Federal Reserve's rate hikes have gone too far. As a result, she sees more ominous indications that the economy may be heading towards a recession or worse, deflation. She has expressed that investors are misguided in fearing high inflation and rising interest rates. Instead, she believes that deflation poses a more significant concern as prices are gradually decreasing.
Then we have inflation indicators, and those are all starting to look very good. CPI up 0.1% for March, still up 5% on a year-over-year basis, and that's what those on the Fed are looking at. Big, long lags. We just got a 0.1. That's 1.2% or so at an annual rate. That's below their 2%. Core CPI was up 0.4. That was a little higher than expected and is still up 5.6. But from there, you see in the pipeline, inflation is disappearing kind of rapidly. The PPI, Producer Price Index, this is upstream, and it will feed downstream into the Consumer Price Index, down 0.5% for the month of March, up 2.7% year over year. Okay, now we have a 2 handle. 2% is what the Fed is looking for, and that's down in 1 month's time from 4.9% on a year-over-year basis. So more than a 2 percentage point drop from 4.9% to 2.7% on a year-over-year basis. Even core inflation, PPI inflation, so core means excluding the volatile food and energy, down 0.1% and up 3.4% on a year-over-year basis, down more than 1 percentage point from the 4.8% the previous month. And then even further upstream, which is import prices, down 0.6% in March and down negative 4.6% year over year. So I've been saying for quite some time that we believe the greater risk out there is not inflation, but deflation. And the pipeline is starting to fill up with deflationary indicators.
According to Cathie Wood, cryptocurrencies have emerged as a safe haven for investors during times of financial system instability. In fact, since regulators seized Silicon Valley Bank on March 10, the price of Bitcoin has skyrocketed by 38%, indicating the increasing confidence of investors in cryptocurrencies during such tumultuous times. This concludes our discussion for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.